The Florida housing market slowdown is far from over. In fact, it's really just beginning. And today we're going to do a deep dive into the Cape Coral Fort Lee housing market because March numbers are in, and I am committed to telling you the truth about what's happening in each and every housing market within the state of Florida so that you can make the best decisions for yourself, for your family, and for your financial bottom line. If you're new to the channel, welcome aboard. My name is Chris Igo. If you're a returning viewer, I appreciate your participation in our journey. And before we get into the weeds here, special shout out to my wife, Mariana, who scored Pearl Jam tickets, which is why I am rocking my Pearl Jam shirt. And if you don't like Pearl Jam, then I am not the channel or the content creator for you. So please, if you don't already, immediately start liking Pearl Jam now. And there has been a massive shift since I last covered this market. And there were a lot of people who commented on the fact that because this was the market that was impacted by the hurricane, that was the reason why prices were going down. And lots of folks were negatively impacted by the flooding and the hurricane. The truth is, it didn't really have a material impact on the price of homes. But supply and demand did. And closed sales in the Cape Coral, Fort Myers, Metro, we're talking about Lee County, closed sales were down 16%. Cash sales were down almost 15%, 14.8 to be exact. Median sales price upticked by 2%, 1.9% to be exact, from 429 to 437. Average sales price tells a bit of a different story. Average sales price includes all the high price points. Median sales price eliminates the high and low values. It gives you the middle term. Depending on which hyperlocal market that you're shopping in and the size of that market and the homogeny of the products that are in it, which of those terms are more relevant to your particular circumstance, which is why it's critical that you work with a professional that understands the hyperlocal market that you're thinking about buying or selling in order to advocate and negotiate for you the right way, because both of these values tell very different stories. Nonetheless, average sales price dropped from 604 and change, just under 605, to 592, or really 591 and change. Median percent of original list price received down almost 4%, from 100 to 96.1. Time to contract jumped 200%, from 11 days to 34. Median time to sale upticked 45%, from 51 to 74. New pending sales are down 12.3%. And to be clear, it's 3.8% to be exact, but there are 2,059 new listings as of March in the Fort Myers Metro. And what you'll find is they're sitting on the market a heck of a lot longer. Pending inventory is down 24%. The active listings sitting on the market, unsold, the inventory of homes, your competition if you're thinking about selling, and your choices if you're thinking about buying are on the uptick big time. And remember, supply and demand are always going to dictate price, but the supply side is up exponentially. And you can expect to see this in most markets throughout the state of Florida and throughout the country as the pain of recession worsens. But as of March, it was 4,225 homes sitting on the market in Cape Coral and the Fort Myers Metro unsold, up 156% from 1,651 in March of last year, which represents a massive jump in supply of inventory from 1.1 months, which is a strong seller's market, to 3.7, which is trending to buyer's market fast, up 236.4%. Great news if you're shopping in this market. No bueno if you're thinking about selling. And closed sales year to date are down almost 18%. And this is not a new trend. Closed sales have been falling off a cliff in every market throughout the state of Florida, in every single market that we've covered. So this should come as a surprise to nobody. Nonetheless, 1,393 closed sales as of March of 2023. And if we look at the historical perspective on this, what you can see is that the closed sale figure for March is very similar to what the March figure was in 2019. It's a little bit under, but it's damn close, which means we're returning to a much more normal market in the Cape Coral Fort Myers metro, which takes us to the story of median sales price. And if you've been watching for a while, you know that I've called for single digit appreciation in most markets within the state of Florida. And that's exactly what we see here in March of 2023. We see a gain of 1.9% in terms of median sales price. Year to date, it's 3.3% appreciation thus far. But if you look back over the course of the last 12 months, you can see that March is one of the slowest appreciating months on record. Not exactly the slowest, but not too far off. The slowest was December of 2022 at 1.5% appreciation. But gone are the days of 23, 28, 32, and 24%. Bye double digit appreciation. And dear God, please continue at least appreciating. But let's face it, homeowners in this market are sitting on a metric shit ton of equity. And that's best represented by the bar graph on the bottom, which you can see for yourself. As of March 2023, we are damn near all-time highs in terms of median sales price. And if we turn back the clock to pre-pandemic numbers, you can see that the median sales price was a touch under 300,000. And I'm going to go on the record and say it was somewhere around 270. 270 versus 437. That is massive appreciation and massive equity that make the homeowners in this market feel equity rich. And that's great up until it's not, because equity isn't real until it's realized. And so if you're banking on that equity to cash out with, when you sell your home, you better move fast because it might not be there. Just like the front row tickets I was looking to get for Pearl Jam, but I'm just happy to be going. Which takes us to the story of average sales price. And average sales price differs from median because it does include all values, the highs, the lows, everything in between. That's what average means to begin with. But in March of 2023, it's down 2.1%, 591,952. Year to date, it's down 0.4%. And while it's not the massive decline of 10% that we saw in December, I suspect it's no bueno to home sellers in this market. And as you can see over the course of the last 12 months, we have not seen a repeating pattern of months yet. There is no trend yet. But I suspect the trend is not your friend if you're thinking about selling in this market. And it's muy bueno if you're thinking about buying. But gone are the days of double-digit appreciation of 27, 22, 24, and 17%. But to get historical perspective and look at what it was pre-pandemic, what you can see is that although we're not at the all-time highs that we saw in May of 2022, you can see that we're not too far from the top. But we are a far cry from somewhere under 350, which is where the market traded back in 2019 in January. Massive appreciation from that point. So homeowners in this market are feeling that wealth effect. They are feeling like they've got a metric shit ton of equity up until they don't. The market giveth and the market taketh away. And the market doesn't care what you think about the value of your home. The market doesn't care what I think about the value of your home. The market only cares about what a buyer is ready, willing, and able to pay right now. And supply and demand will always dictate price. And new listings are, I'm still alive, yeah. Oh, I'm still alive. I couldn't help myself. All right. And new listings, they're up 5% year to date. March of 2023, up almost 4%. 2,059 homes were listed in March. That is a big jump if you look over the course of the last year. And the last time we were over 2,000 new listings in this market was May of 2022, which was an uptick of 18%. And while there was definitively a short supply in many months over the course of the last 12, if you look back at the -5, -5, -45%, -20, and -3.1, the trend is on the uptick. And I suspect investors and homeowners that are in this market are looking to cash out if they're thinking about selling. And at least as far as new listings are concerned, we have returned to pre-pandemic numbers. Because as you can see on the bar graph below, in March of 2023, we are almost exactly where we were in terms of supply in January of 2019, pre-pandemic, which is a return to normal. But active listings, the inventory of homes sitting on the market unsold, has not returned to normal. Although active listings are at their highest figure since they've been in any point over the course of the last 12 months. There are 4,225 homes sitting on the market unsold, which is an increase of 156%. And year to date, that number is also up massively too, up 165.5% for the year. But if we look at the graph on the bottom, you can't help but notice, although we are at a high over the last 12 months, we are significantly under by almost half of where we were in 2019. Because in 2019, there was something north of 7,000 listings sitting on the market unsold. And to be clear, I know it's not a 50% decline from where it was in 2019, but it's close enough to illustrate my point. But based on new listings and homes sitting on the market unsold, I hope it's very clear that the supply side is stacking fast, and supply and demand will always dictate price. And the month's supply of inventory illustrates exactly what I just said. March 2023, month supply is at its highest point in the last 12 months, up 236.4% at 3.7 months. Year to date, it's 3.4 months of supply. But if you look back over history and see where we're at today and see where we're at as of March, you can see that we are far from where we were in terms of month supply in 2019, in a normal market pre-pandemic. And while I suspect the trend is not our friend moving forward, it has to be noted that 3.7 months is a far cry from the almost 7 months that we had in 2019. Which takes us to closed sales by price. And I think it's important to understand the different price point sales that happen in order to get a flavor for what the market actually is and gain some context. Is that every price point across the board, with the exception of homes that are under 100,000, are all declining fast. And closed sales in every price point have fallen off a cliff. So I hope this doesn't come as a shock to anybody, because I've been talking about it for over a year. Which takes us to new listings by initial listing price. And I think this is also instructive because it will give you context in terms of what the market looks like by price point. And as you can see on the chart, biggest drops in new listings are at the lowest price points. And the biggest increases in new listings by initial list price start in a big way between 300,000 and 400,000, with an uptick of 22.8%, 565 new listings in these price points, followed by 400 to 600, which has 598 new listings, an uptick of 1%. Followed by 600 to just under a million, which is up almost 2% at 459 new listings. $1 million or more can get quite pricey, because there's a massive difference between $1 million, $5 million, and $10 million. But that bracket is on the uptick by 12%, with 279 new listings. Supply side is stacking in the higher price points, as evidenced by the inventory by current listing price. And what you'll notice is that these higher price points have all increased exponentially, with 300 to 400 on the uptick by 208%. 1,024 homes are sitting on the market unsold in Cape Coral, Fort Myers, Metro. And the 400 to 600 price point is up 169%. That means there are 1,254 homes sitting on the market unsold at that price point. And it gets even worse between 600 to a million, which has upticked by almost 180%, 178.6 to be exact, 1,056 homes sitting on the market unsold in this metro between 600 and under a million. But the $1 million homes or higher have upticked 111%. 704 homes, luxury, likely waterfront homes sitting on the market unsold between a million and infinity. No bueno if you're thinking about selling, and muy bueno if you're thinking about buying, because you've got a heck of a lot more choices and you've got leverage, which you didn't have a year ago. Which takes us to the distressed sale market. And the distressed sale market is what unhinged the market the last time the market crashed. Well, as of March 2023, there are no distressed sales in the Cape Coral Fort Myers metro. And yes, there were some, but it is statistically insignificant. Up until it's not, which is going to take a lot of time. But foreclosures in March of 2023 were down 54% at 5 from 11. And short sales, there were none. Zero, zilch, nada, wasn't a thing as of March 2023. Up until it is. But again, that will take time. But one thing is for certain, the Florida housing market slowdown is far from over. Now, I hope you found this content valuable, and if you did, please subscribe to the channel. If you're even thinking about buying or selling, please reach out to me directly because we would love to help. And stay tuned because I will cover every metro within the state of Florida as soon as I possibly can. And check out my next video because I suspect you will love it a lot. And until next time, peace.